Good afternoon, everybody. It is your fearless leader, Jason Fields, here. And I wanted to come to you all because July 22nd, we launched the Black Wealth Network and wanted to just say thank you to all of you who've signed up. We've been having great responses. Again, we're over 300 clients nationwide from New York to Los Angeles, and we're growing rapidly. You've never seen a platform like this, and so I want to thank you for following me on Facebook at the Black Wealth Network, our Facebook page. You can also follow us on Twitter. You can also follow us on LinkedIn, the Black Wealth Network. And personally, you can follow me, Jason Fields, on those same social media platforms: Facebook, Twitter, LinkedIn, and Instagram, Jason Fields and or the Black Wealth Network. And so today I wanted to make sure that I've been getting some questions, and a lot of people have been getting interested and they want to start. And so I wanted to make this tutorial, this quick video, to show you just how simple it is to invest and get your portfolio building. And whether that's 5 to 10, 15, 20, 50 to $100 a month, whatever it is you can afford, you can do that. And through us, you have the power and the ability to invest in well-known money managers. Yes, they're not all African American money managers, but we have some of the best ones in the world on our platform. And so I want to take you really quickly to, once you go to the website, www.bwnonline.com, you can see here in the toolbar, the search bar, it's really as easy as 1, 2, 3. And so for those of you who ask, well, Jason, what do we do? Where do we go? It's all right here for you. And I want you to see just how easy and quickly you can do these things and show you how to play around with it so you can start really looking at achieving your financial goals. So first thing, you say, Jason, I want to do this. I'm going to go to your website. And so you click on the 3-step planning. And again, it's as simple as 1, 2, 3, and you guys will see that. So let's say you're a person that is you're either you're looking for retirement, you may be looking to provide an education, you may be looking to have a vacation, a wedding, a new business, you may be looking at purchasing something. But just for sake of this tutorial, let's say you want to retire. So retiring style, I love that. And we're going to look at, okay, what's your savings plan, your short term? It's going to be either a general savings account, either individual if you're married, or if you have a partner, it'll be an individual or joint or investing account. If it's an education account, it would be for an education savings account. But let's just say it's a retirement account. And so we're going to look at a Roth IRA. You go to step 2, and we'll just wait. Now, what you'll do is you'll go to step 2, and here's where it gets really interesting, and I think you guys will enjoy this. So in step 2, we really start putting in the numbers. And let's say, so I want to retire, I'm 44, just to use me as an example. And I want to be able to retire off of, let's say, $3,000 a month. Let's say I turn 67, 68. I want to have a consistent $3,000 a month of retirement income. And that's not including Social Security or anything else. That's just including the portfolio I want to build here. So I'm going to input $3,000. And I want years to make those monthly withdrawals. So I want that to last, let's say I'm 44 now. I want that to last, let's say 23 years, just to make the math simple. So 23 years, I would be 67. And annual rate of return, now you can play around with this, but this is for you beginning investors, your moderate investors. A conservative number most of us use is 8%. Now, because I'm a day trader and an investor, I like to use higher numbers, but I advise you to play around with it to see where you're at, what you would need to do, and really to get a feel as to how it will look. So let's just say 8% is the return I'm aiming for. Now, historically, the stock market has given us a return of 11%. I'm going to show you the difference fairly shortly. But for right now, let's look at 8%. You press the calculate button. And what it says is that in order for you to retire and get $3,000 a month for 23 years, you will have to have $378,000 basically saved up. So in order to retire off of $3,000 a month, I know that by the time I reach age 67, I need to have saved over $378,000. Now, that's one way of looking, okay, you're starting backwards. What's the amount I need to get to that point? Let's go back because I want to show you the difference between an 8% return and historically, let's say 11%. As before, with the 8%, you needed 378. Here at an 11% return, you actually lose you don't lose, but you actually don't need almost 80,000 additional dollars. So at an 11% return, you would only need 300,000. And this is working from backwards. This is working from once I reach retirement, I want money to last for a certain amount of time. How much money do I need to do that? So if you want to start at the beginning, meaning, let's say I want to, I'm going to put how much to save. Let's say I want $1 million, right? I want $1 million to do the things that I want to do. 1, 2, 3, 1, 2. I believe that's right. Let me just make sure. 1, 2, 3. Okay. And I'm going to say I want $1 million within, let's say, 10 years. Now, actually, let's say 23. Let's use 23 again. I want $1 million by the time I'm 67. How much money do I need to save? And what's the rate of return? So again, I said that most of the times we use a typical 8%. Again, me personally, I use a little bit higher numbers here and there because, again, I do investing as a living, and 8% is fairly conservative and moderate. So at $1 million, you input your numbers. I would need to save roughly $1,267 a month, which is doable. If I want to have $1 million by the time I'm 67, I believe, or I would need to invest $170,000 at that 8%. Now, again, going back to just show you some of the numbers, let's say we put that 8 at 11%, and you'll see that, again, now I only need to put away $800 a month or a required lump sum of $90,000. So it shows you, and it does a lot of these things for you. So you don't have to be a nuclear physicist. You don't have to be a professional investor. In our platform, we tell you where to go. We help you input the numbers. We even tell you what these things mean. And we make it as easy, again, as 1, 2, 3. So let's just go back to retirement. And we say monthly withdrawal amount, $3,000. Years I want to take that, 23, and at an 8% return. Calculate that, and that's the number I'm shooting for that I would need. So once we input our goals, our game plan, then we go to step 3. Step 3 is where we get all of the information as to all of the funds that we offer. We find out what's suitable for you. And many of you are going to have different suitability levels. Many of you will have different risk tolerance levels. So again, this is just an example. So for me, let's say retirement. My time horizon, again, we've been using 23 years. Income level, I'm just plugging something in. 150,000 max. Let's say single. I'm not single, I'm married, but this is just for example purposes. Risk tolerance. For a person like me, I'm sort of aggressive. Years of investing. Again, I do this professionally. Disposable income, meaning how much money do you have after all your bills and everything is paid off? What's your cash flow? Let's say 1,000 to 2,000. Any children? No. So you go through the risk questions, the suitability questions, and then what'll happen is if you look at find what's suitable for an investor like you, you click on find, and what you'll see is that it will recommend the kind of fund that you should invest in, the kind of portfolio that you can invest in. Now, once you do that, you click to open an account, and then it will begin to, you go through these steps, open your portfolio. It'll begin to ask you more personal questions. We're going to save and proceed here. It'll get all your data, registering your information. It'll get your bank account information and all of these things so that you can now begin to invest in your portfolio. Once you click save and proceed, it will take you then to this page where, remember that the recommendation in this example was for a growth fund. And here you'll see that on our platform, we have some of the best mutual funds managed by some of the best individuals that I believe out here. And so we looked at a growth fund. So what you can do is look at these examples and you can say, okay, here's some growth funds that I see: Vanguard Small Cap, Vanguard High Dividend. Let's look at this large cap, Edgar Lomax Value Growth Fund. Because remember, based on the questions in our suitability level, growth fund was what the recommendation was. So I'm going to take a look at this fund and see, okay, what's going on with this fund? A couple of things that I want to point out. Had you or were you to go and then try to invest in this fund on its own, you would need a minimum initial investment of $2,500. However, the beauty of the Black Wealth Network is that you are not required to have that $2,500. Because of our relationships with these mutual fund money managers, these great individuals, you can invest systematically monthly, $50, $25, $50, $100 a month in these funds. So I'm going to look at this and I say, okay, maybe this is a good fund. I'm going to look at the performance. And I'm going to scroll down, growth of $10,000. So year to date, if I put in $10,000 beginning of this year, based on, just from year to date, I'd be at $10,007. 1 month return, $10,088. 1 year, $11,266. And as you can see, when you look at the rates of returns here, 12.66 return a year, 10.4, 10.65 for 10 years, 9.35. So you can see that most of the times certain good funds are above 8%. But again, for you beginners, use 8% because it's typically a good number, a good moderate conservative number to use. And so I'm going to look at this fund and we can see that most funds outperform the S&P a few times. There are funds that can do it, that can outperform 6 out of 10 years. But when we're looking at this here, Lomax has performed fairly well. Yet over the long course of over the longer history, it hasn't beaten the S&P. So let's say you go, well, you know what? Let me look at a different growth fund. So you can go back and go, okay, I liked Edgar Lomax Value. They were okay. Let me look at another growth fund. Let's look at John Rogers. John is an African-American, one of the best money managers who has consistently beaten the S&P over a longer period of time. And we're going to look at his Ariel fund. So I'm going to click on here. Now, what I want to point out is if you look at John's fund, here's the blue line. You can see that John has historically outperformed the S&P 500, which is the green line. We can also look and go down at his rates of returns, and you can look at the growth of hypothetically $10,000. You look at his returns, 13, 9, 11, 12. Now, one of the good things about John's fund is that when you look at the return versus the category that his fund is in, it's pretty high. That's good. Now, also, when you look at the risk, it's high. So the difference between some of you who say, well, I like this fund versus the Edgar Lomax fund. Well, maybe some of you are this risky. Some of you are not. And so it's really going to be important that you pay attention to this risk, because as you get older, you don't want to be too risky. You don't want to risk a lot of your principal and investment capital. So for a person like me, this is okay. If you're 60, 70, this risk that you're taking to earn this high return may be a little too high for you. So long story short, you come here and you can select a group of mutual funds or from a group of mutual funds that we have. You open up an account. Again, it'll take you through that process and you'll be investing in a matter of, guys, I think this may take you 10 to 15 minutes. The rest of our platform, as you can see, our home, we give you the calculators. I advise all of you to play around with those. We give you the funds list, the account types. Here we tell you what kind of accounts, what they are: individuals, joint, uniform gift to minors, an individual retirement account, or Roth, education savings account. So we offer these accounts so that you can look and understand and get a feel as to what kind of account you want. We also, what I love about the platform is we give you a ton of education, and we're going to be periodically updating this to give you more. For example, basic of savings, basic of investing, basics of the economy, personal finance. And these are items that you can read at your leisure, which I think gives you a good foundation as to becoming a portfolio investor of your own portfolio. So the beauty of this is, again, you don't have to have $2,500 to invest with some of the best money managers around. You can do that at $10, $20, $50, $100. You can get access to your money when you want it. Again, there's no other platform out there like this that does exactly what we do. I'm glad you guys signed up. I'm glad. Thank you for the interest. Thank you for the support. We are well on our way to, by the close of this year, by the close of a year, having at least 5,000 accounts open, given our new upscale release and a lot of the news and the media that we're getting. A lot of people are spreading the word. So I want to thank you all for that. And again, this is Jason Fields, the ambassador, CEO of the Black Wealth Network. You guys make sure to follow us on Facebook, LinkedIn, and Twitter. And if you don't see that, you can see Jason Fields, because we're all the same, and I'm connected on everything. Everything we do is about trying to improve the financial life for all of you. So thanks again, gang. See you on the good side.